Asking questions to the MPC and the RBI governor. Our colleague Vishwanath Nair is banking editor, joins in right now from right outside the place of action this morning. Vishy, all eyes on what the MPC says, if not what the MPC does. Trying to understand what would be top of your mind in the press conference.
Right. As you announced, the RBI, the MPCs met over the last couple of days, and today they are going to make the latest monetary policy announcement. Now, remember that the expectation far and wide is that they are going to hold rates again. This will be the sixth time that the MPC holds the benchmark interest rates, as well as maintains its stance as far as accommodation of previous sort of accommodations are concerned. So removal of those accommodations. So that stance is likely to continue again. What will be important, as you said, is what the MPC says versus what it does. So what it will say is likely a dovish stance. That's what economists are expecting, that at some point in time after April, you will start seeing rates coming down. Remember that the benchmark repo rate has been set at about 6.5%. So over the last six policies, that's where it has been continuing. So if there is any indication of a rate cut coming anytime soon, then that becomes an important point to note. Now, remember that in December, when the CPI numbers did come in, they were slightly higher than the 4% target, about 5.69%. So that will the eyes will be on what the RBI and the MPC view as the future sort of trajectory of inflation. January data is still pending. That will come in maybe next week, and that's when we'll know whether the inflation trajectory has come down at all. During the last policy, the RBI said that it will come closer. Inflation will come closer to the 4% target only in the second half of FY25. So we need to see whether that undergoes any kind of change, any kind of outlook on growth. The second point that the MPC and the RBI's commentary will focus on will be on banking sector liquidity. Now, liquidity was in deficit for a pretty long time, but since December, since the last policy happened, things have eased a little bit. Remember that right after the budget, the government is also likely to spend a little more because they still have to meet their spending target, which they will achieve by March. So therefore, there will be some improvement on the liquidity scenario, but we need to see what the RBI says it will do. Remember that they have been also conducting variable rate repo auctions regularly to maintain short-term liquidity. Now, aside from all of this, one important question that will be on everybody's mind, every single reporter that I've spoken to is expecting to ask this to the RBI governor, that is with regard to what is happening at Paytm and Paytm Payments Bank. Now, these things are, of course, not rate related, but these are important regulatory decisions. Just a few days ago, the RBI put severe restrictions on Paytm Payments Bank on conducting future transactions. February 29th is the date after which there will be no further deposits allowed into Paytm Payments Bank account, which puts this large sort of fintech entity in sort of jeopardy. So we need to see whether the RBI gives any further clarification, any kind of indication as to what they want to do with Paytm. So these are three things. First, on the rate trajectory. Second, on the banking sector liquidity. And the third, on what happens to Paytm going ahead.